guys, Brian Stevens here with MortgageShots. Listen, we have a great show for you today, but I did an interview a couple of days ago with Angel Oak President Tom Hutchins and AE Eric Morganson. They have like 7 new programs and products that have came out that other non-QM lenders don't have. Check out that video. Your business will thank you for it. Make sure you reach out to my friends over at Angel Oak.
Doing awesome, Brian. Thanks for having me.
You know, I just saw an article on CNBC a couple of days ago, and they said due to the tariffs, which I don't really necessarily buy into, but people are looking to alternatives to like our agency products. And I think non-QM is like sitting somewhere like 5 to 7%. And I'm looking at my personal business, it's non-QM is like 50%. And it becomes a really great point to like jump off. But I think what we're seeing right now with the current administration and with prices, you know, the trajectory for non-QM was kind of like this. I think it is looking more like this. It's becoming, it's no longer the, the backup shortstop. It's the starting shortstop in our business.
And it's the hockey stick that we've been anticipating in this industry or in our market since we began. And we've seen some mini hockey sticks, but then some curveballs got thrown at either non-QM specifically with COVID or the curveball thrown at the entire mortgage landscape with the quick rising interest rates, which affected everyone. So I agree with you. And, that's the one thing that I'd say over the last couple of years, more and more originators have gotten to know non-QM and have actually originated non-QM. And that's all we've ever asked is, hey, dip your toe in the water, give it a shot. They're easy loans. They're easy to understand. They're not agency, so you don't have to do you, and your process might be a little bit different. But at the end of the day, there's a huge market of potential borrowers out there that if you're not originating non-QM, you're completely missing.
Well, when you look at unaffordability, which is in every state, and I've kind of watched this thing go out of control, one of the things I looked at is your average gig worker or 1099 worker, they make twice as much money as your average W-2 worker.
Yes.
And so I'm like, well, if houses are unaffordable, you need to find people who have money. Who has money? People who do non-QM loans. I gotta say this. It came to me. I was speaking with Eric Morganson, great dude, and he was showing me your quick qualifier, and I was kind of floored by the whole thing because faster than my point of sale and my loan operating system that I'm using. Within a couple of minutes, I could put in 6 or 7 different fields. It would tell me the programs. It would tell me the pricing. But what made it really cool was it told me exactly what the guidelines were. And so I was sitting with a client and we were changing things. What if this? What if that? And this reminds me like what I had, I swear to God, 2 decades ago. It was that easy. I'd like to start this off about your quick qualifier and what you got going with that.
It's a great tool. In fact,
amazing.
We train our brokers that instead of picking up a phone and calling an AE and asking a question, start on our website. It only takes a few clicks and then it gives options. So let's say you ask for a 70% loan to value and you put in some information. We'll give you the 70%, but then we'll also tell you, but we could do an 85 or a 90% if that's what you prefer. So that then you can just go up and change it to 85 and then it recalculates in a matter of seconds. So it is a great tool. Then the other thing is, a big part of non-QM is bank statement borrower, self-employed borrower.
I was just going to say that. Yeah.
Then the next step is, just put the 12 bank statements, uploaded that into the system, and we use some technologies that get an answer very quickly back to you. So it's, within your effort as an originator, your effort of a couple minutes, within a few hours, we can tell you that you've got a loan. And here's the income, in fact, that we're going to give you for that borrower. So speed matters, with the competitiveness of the market, everybody wants answers now. And this is a great way to learn non-QM and get answers very quickly.
In seconds. It's funny you say that because when I was going through it, I was doing a full doc deal and it gave me my pricing and it gave me all my conditions in seconds. I'm not kidding you guys. This whole thing took 1 minute. Yes. Not even just nothing. And then I'm like, well, let's go all doc and let's go bank statements. And then everything changed and my pricing got a quarter, 3/8, something like that better. I'm like, there's no way. I called my account rep. I'm like, what's going on here? I'm like, bank statements is pricing better than full doc. He goes, yeah, that's where the money is right now. I'm like, are you serious?
That's what we do. We originated bank statement loans. Yes, we do some full doc, but that's not what private equity and private capital is really looking at.
Listen, let's pull away for a couple of minutes and talk about some of the exciting changes and programs that Angel Oak is offering right now with Eric Morganson. Eric, you are in Australia right now. You just landed, right?
Brian, I appreciate you having me. I've known you for, I've known of you for 20 years now, it seems like, online. But right now, I want to let everybody know that, there's a lot of openings in the mortgage industry. And boy, there's niches inside of niches. At Angel Oak Mortgage Solutions, you have ample bank statement refi opportunity. Now, what am I talking about with that? I'm talking about now we go off of the primary wage earner's credit score. We'll use the co-borrower's income, but we use the primary wage earner's credit score. The whole industry for the last 10 years was going off of the lower middle score on bank statement loans between a borrower and a co-borrower. Well, right now you can literally lower their rate as much as 1.5 points by identifying those past bank statement loans that you did that you went off the lower score of the two. That's just one aspect. Right now at Angel Oak, all of our loan programs, except for seconds, only requires a 3 months reserves. That's on a bank statement loan. That's on a full doc loan, jumbo, only 3 months reserves on all of our programs. And oh, by the way, if you're doing cash out, that cash out equals the reserves. You want to talk about SB 326 condos in California? Wow. As long as the survey has been done and they've started working on the condos and the subject properties condos already have been fixed, we will lend on those right now. On a business bank statement loan, it used to be you have to have 50% ownership of the business. Now it's only 25% ownership of a business going bank statement loan.
So these are big changes. These are the difference between getting a deal and not getting a deal. And these are things that Angel Oak is doing that is really kind of paving the way for more opportunities for more lenders to go out there and get more clients.
All of you mortgage professionals out there, boy, you have a set of guidelines in your head, and that's kind of what you're focused on. But I want you to just get this Gatoma out there and start going, wow, look at all these opportunities that I'm not even thinking about. Let's talk about the California condo or Florida condos. Look, you got a major wind issue. You're seeing premiums double in the past 90 to 120 days in Florida. California, guess what? Fire. Our premiums on condominium complexes have doubled over the last 90 to 120 days. So now you're in charge of the homeowners association, and now you're getting hit with this. Now it's double. Now you got to assess all the people that own the condos. You got to up those HOA fees. Nobody likes to be in that position. So what do? They crank up the deductible, just like you can with your car insurance or your health insurance. Crank up your deductible and you'll lower your premiums. Well, they've done just that. Now, when they've cranked the deductible up to 10%, used to be 5, now it's 10. Now it makes it non-warrantable. Guess what? Loan officers out there, you could be the only game in town that could lend in that condo complex that now went to 10% deductible with Angel Oak.
It's so funny you say that because I was just calling on top producing realtors down in Florida. There's more top producers by my standards in Florida than anywhere in the country. Like for a realtor to have 20 to 30 listings is very commonplace. And it's because people are fleeing all the condos out there. And I spoke with a guy who had 25 condo listings. And with your product, it would be just a feeding frenzy for a loan officer to go down there because you can get these things right now for pennies on the dollar. Yeah, you really can. Like condos in Florida right now, you could go out there and you could get your license in Florida with this program that Angel Oak has. I mean, you would just tear it up.
There are tens of thousands of commissionable dollars lying right here, low-hanging fruit, and yet nobody's really paying attention, Brian. How about bank statement seconds? All the loan officers out there that have ever done a bank statement loan, guess what? That's a self-employed borrower. Never, ever underestimate the desire for somebody self-employed, for an entrepreneur, to get their hands on capital. And they're just doing what? Staring at all this dead equity in their property that they can only get to if they do a rate and term, they cash out refi. Nobody wants to touch that first interest rate in place. Or if they sell their house, they can get their equity. Now where are they going to go? Now you guys have a solution for all these self-employed people out there with employees. They duly know when the 1st and the 15th is due every month because that's payroll. Maybe they're inventory rich but cash poor. Guys, you are the solution with we go to $750,000 bank statement seconds.
Wow.
Oh, wait a minute, to 90% LTV.
That's
CLTV,
crazy.
90% CLTV on these seconds.
Hey, listen, guys, all the contact information for all of our Angel Oak account reps are down below. Of course, you got Eric's number. Feel free to give him a buzz. I want to talk about some of your newer programs. What is exciting, and what is the next generation of non-QM look like that you guys are providing right now?
Well, I'd say we're always looking at our core products are the professional investor, the DSCR loan, and then the self-employed borrower, the bank statement loan. Those make up 90+% of non-QM origination across the landscape. So there's features that we just keep adding on and making these products just expandable into more borrowers, because we think, you talk about go for the people with the money and the income. Our average loan amount on bank statement loans, and now you're in California, so it's even higher in California, but nationwide is just south of $600,000. So,
Yeah.
We're doing big loans, and anybody who thinks non-QM loan, I don't want to mess around with a $200,000 loan or whatever. That's not it at all. These are kind of the high worth individuals, high asset individuals that are looking for alternative financing, because that's what they need. They have a good accountant, and their accountant does what their job is, and that's to limit their tax liability. And traditional loans, full doc loans, all they look at are tax returns. So, we think that just continuing to improve specific items within the bank statement borrower and within the DSCR loan, those are what is going to really keep driving non-QM forward. And then if we have some other features or products or programs along the way, we'll bring them to market when we know the market is ready for them.
Now, what are some of the kinks that we have? Like one of the things that I think you guys do really well is you actually have underwriters who can actually make decisions on files, which is wildly important for people who don't deal with non-QM on a regular basis or going to your agency wholesalers for this. Yes. You guys actually have underwriters who are looking at files who can make decisions on these. When it comes to your bank statement loans that we're dealing with, and our asset depletion loans that you guys are dealing with, what are some of the kinks that makes Angel Oak stand out amongst your competitors?
Well, I think you just said it. We are a lender and an investor, so a lot of it is just our relationship. Is that we have underwriters that make credit decisions. And we've been doing this forever. Our underwriters look at a loan and they don't get caught up in the guidelines per se. They think, is this a good loan? Is this a loan that we should make? And then we make those loans. And we work real hard to, our account executives are well trained, well experienced. I think at the last time I saw the average tenure of our account executives at Angel Oak is over 6 years. That's a long time in the mortgage space. So we have a lot of experts in the field, and they've been trained and they're experienced enough and have originated enough non-QM loans that they can look at a loan and kind of already anticipate where there might be a hiccup, and we address it up front. And that's what our customers say to us all the time. We love Angel Oak because when you say you're going to do a loan, you're going to do it, versus we say we're going to do it, and then we're going to go ask some other people, maybe some investors, we're going to run it by them, and then they say, no, we won't do it. And then everything changes and the whole structure of the loan changes, or it's just killed altogether. So I think that's really it. And we work sales, account executives, and credit are kind of joined at the hip. And we work together every single day to make this process and these decisions faster, sooner in the process. We're also looking at technology that we can bring in for those, the kind of the slam dunk, the layup loans that don't need an underwriter to make a decision with their eyeballs, but we always will have that as part of the process.
You said a couple of things that I want to stress. Having underwriters who actually make decisions. There's a fundamental difference between your AUS that you're doing with your agency deals, and you're going to be qualified or disqualified simply by the findings. That's it. And the underwriter is basically just checking boxes. Yes. When you work with Angel Oak, they have underwriters who have discretion, like back in the old days. and they can look at a file, and if they have a make sense file in front of them, they can go ahead and pull the trigger on that, because they're not selling off like your agency typical paper meat and potato borrowers. So when you go to a strictly non-QM company, there is wildly more flexibility in programs that you might think to be the same, but they're not.
Well, and I have to point out, Brian,
Sure.
we are a non-QM lender. We are not an agency lender. So
Right.
and 100%, like that's all we do all day, every day. And that's pretty important, because there's a lot of non-QM lenders in the space, but a lot of them are in the space because agency volume is down. And that's not, we were in non-QM before non-QM was cool. And there's a difference there.
There's a huge difference. And that, like I said, when you're getting hit up by your agency people, your Fannie, Freddie, Jenny stuff, and they're now offering non-QM, you have to understand they're stuck in a box with what they're doing. When you work with a company like Angel Oak, they have discretion in what they're doing. And this is the difference between closing deals and not closing deals. And when we look at the trajectory of non-QM right now, it is skyrocketing when the rest of the market is retreating. The other thing you said that just made me think of this, and I want to share this story with you. But when you were talking about the tenure of your average account rep is 6 years, one of your account reps is a guy named Jeff Ogden. Jeff Ogden, when I was a broker, when I was, before gray hair and receding hairlines, we would send all of our business to, I forget who it was. And Jeff Ogden used to show up to my office every single day of the week. I'm like, you're not getting business out of this. Like, why are you showing up? And then slowly he would pick up business. Now, the interesting thing is he switched jobs, and he didn't have a job for a month. I'm like, where are you working? He goes, I'm going to find the right place, but I want to work at the right place. I'm like, why in the hell are you here? Like, what are you doing? Like, what are you doing? You don't even have a job. And he said something that stuck with me. I've shared the story a million times. He goes, because when I find the right place, he goes, I need you to still remember me. And I'm like, damn. And I've taken that my entire career, and I've kind of run with it. So when you talk about having good account reps, and he's with you, and I ran into him, and oh my God, I can't believe I'm seeing you again. And it was such a wonderful conversation. And we went through your products, and Ogden was just nails. Nails.
Yeah.
And it was
he's awesome. And that's because we're in the relationship business. We're in the relationship business. We have a product that we believe is needed, and we believe there's a lot of people that don't know the opportunity around it. So we're out there networking and talking. But at the end of the day, you send a loan to people that you trust. And Jeff's a great example of somebody who gets business because of his relationships and because of the trust he's built with people like yourself over the years.
Listen, in closing, what's one thing that you want lenders and realtors to understand about non-QM and what their actionable items are?
I'd say as an originator, you have to be participating in non-QM. If you are not, you started this, Brian, by saying non-QM might be 50% of the market.
I think so.
Non-QM's growing. It's growing. Yeah. What other segment in the mortgage space is growing? And that's when there's not that many transactions. So let's think about that next wave of transactions, real estate transactions in the industry. If you're missing out on, non-QM is never going to be 50% of the market in a long period of time. Could be wrong. You shook your head.
Honestly, I disagree. I think it's going to be 50%. I do.
Okay. Well, let's just assume it's only 10%. It's still that's a $200 billion business at today's level. So that's a $200 billion business. And if it grows to, I hope you're right. If it grows to 50%, we're talking $1 trillion of non-QM loans. So you have to get to know them. And then to the agents in the world, that's a great way to expand. We have a lot of customers that they've just become the self-employed experts. That's what they are. They promote themselves, they market themselves, self-employed experts, and that's what non-QM is. It's for those borrowers who own 3 different companies, and they got their movers and shakers, and they have tons of assets. But then they call their broker, and the broker says, sorry, your tax returns won't qualify you for that house that you want to buy, and that's just kind of like yesterday's lending.
Yeah.
And so that's really the message. It's not a message that's changed from our perspective. It's just become aware of these products. They're much easier than anybody thinks. We've used technology. I mean, you talked about our quick pricer and quick quote tool, and all that's what I'm talking about. The quick quote can get you in there in a few seconds, and you've got answers, and if you can keep going with that borrower to get a deal done.
You know what's a trip about that? I don't want to keep kicking a dead horse on this one, but when within a couple of minutes, you fill out a few fields, it almost underwrites a file. It just gives you like what your conditions are. It's really cool. Guys, you have to look at it. By the way, if you want a link to it's on the site. So go check it out. Run a couple files through. Run a couple scenarios, and look at this whole thing. And again, to my point, and I think this is really important. If you covet business, you have to be fluent in the language of the business that your clients are looking for. Non-QM is a huge part of it. And when you become good at non-QM, it builds all of your business. Absolutely. I mean, maybe you have somebody who goes agency, but when you understand that you can get that gig worker, that self-employed person, you can get them as a client. And frankly, a lot of self-employed folks, they're birds of a feather. It opens up huge areas. I'm not kidding you when I say 50% of my business is non-QM. And I've actually worked a deal with you, and it was fantastic. It went really, really great. So
I read something recently, Brian, just real quick. It was like 60 million taxpayers in, I think it was 2023 or 2023, since 24 just finished. 60 million taxpayers generated more than 25% of their income from a self-employed business. Yep. I mean, if that's where it is today, they're setting records for new business applications. I think it's 400,000 a month. I mean, it is where the space is headed and where mortgages are going to continue to grow. So and one other thing about our website, if you don't know an account executive, there is a Find My AE spot. It has a nice little map of the United States. You click where you are, and we'll show you the AEs in your local market. So be sure and check that out as well.
And if you want to know where you can find that, it's right below this video. So check it out, click on it, reach out to an account exec, and find a way to become fluent in the language of the people whose business you covet. Because I'm telling you right now, Angel Oak has this whole thing going. Tom, I totally appreciate this, and let's keep this conversation going.
Sounds great. Appreciate it, Brian. Talk to you soon.
Thank you so much.